Breaking news! This just in. The former head of product for OpenSea has been indicted for insider trading with NFTs. New York is cracking down on Bitcoin mining, and Arthur Hayes, the former CEO of BitMEX, thinks the bottom could be in for Bitcoin and Ethereum. Before we get started with this week's edition of the weekly breaking news for cryptocurrency, if you are new to the channel, welcome. My name is Dirk. Subscribe down below, click that notification bell if you do. If you want to get on my email list for more updates and notifications whenever I publish a new video, click the first link in the description down below, enter your name and email, you get on the email list. You can also follow on Twitter, Instagram, and join our free public Telegram. The links are down in the description below. Alright, so the former head of products for OpenSea indicted after insider trading scandal. And basically what happens is that this former head of product had obviously knowledge of NFT collections that would be listed and took advantage of this information for themselves. So you can see over here, he was previously accused of using secret Ethereum wallets to purchase NFTs based on confidential information that they'd both be featured on OpenSea's homepage. He was allegedly responsible for selecting which NFTs would be featured on the homepage according to the indictment. So that is obviously quite a bit of a conflict of interest if he's buying NFTs and he's in charge of which NFTs get displayed on the homepage, which obviously gets seen by millions of people. So I'm pretty sure this kind of stuff happens a lot more in different places in the crypto space, but obviously in all financial markets. And just don't do this because it's not a good idea. You're going to get caught and it's just not worth it. Now, what's interesting is that New York has just passed a bill cracking down on Bitcoin mining. So New York definitely does not seem to be very pro-crypto or very crypto-friendly. And we've seen this before with their restrictions of listings of altcoins and different exchanges, the availability of different altcoins that you can purchase in New York. That's probably one of the worst places to be if you are in crypto in terms of, full accessibility to the whole range of whatever crypto has to offer. And now it seems to be getting even worse, where there's a new bill cracking down on Bitcoin mining. So basically the lawmakers in New York just passed a bill to ban certain Bitcoin mining operations that run on carbon-based power sources. The measures now need to head to the desk of Governor Kathy Hochul, who could sign it into law or veto it. So it's just a bill that's still not passed yet, but again, it doesn't look very promising for New York. So if you're doing any sort of crypto operations or anything like that, doesn't look like that is the place that you want to be located. Now, Binance has raised another $500 million fund to invest in Web3 as crypto slides into the bear market. So as they say, builders keep building in the bear markets. A lot of money is still being raised, a lot of money is still being poured into funds, into developments. And like I've said in previous videos, I believe that all this hundreds of millions and billions of dollars of capital that are being invested into the infrastructure and into these startups and new projects is going to end up showing itself, even though it will take probably a couple years for all of this to really start to be built out. In the same way that, if you start construction and you start building skyscrapers or apartment complexes or anything like that, you can start, but it takes time to actually build the foundations and to build the structures. And before you can actually move in and start using it, a lot of time passes. It's the same thing with tech and with crypto. Fidelity Digital Assets plans to double staff this year. So the firm is planning to add 110 employees in tech roles, including engineers and developers with blockchain experience. So as you can see, the infrastructure growth, the investment continues behind the scenes. Now, the former CEO of BitMEX, Arthur Hayes. Now, there's a whole interesting story behind BitMEX and Arthur Hayes. If you don't know that, you should Google it because it's a pretty big part of crypto history, where BitMEX was basically one of the largest, if not the largest, major leverage exchange for cryptocurrencies back in the day, years and years and years ago. And of course, that ended up being accused of not having the right licenses to being able to operate a derivatives exchange and so on and so forth. There's lots of accusations behind a whole lot of shady stuff that went on behind the scenes, including with Arthur trading against their customers, purposely, moving markets and manipulating markets to be able to liquidate traders who traded on that exchange. So a whole lot of stuff behind there. But nevertheless, whatever happened, Arthur still has some interesting insights and he continues to share his thoughts. You can find him on Twitter, and he also has a blog on bitmex.com. And in his latest blog post, he seems to suggest that the bottom of Bitcoin is actually in at around $25,000 to $100,000. He thinks this is the cycle's bottom. He's also got a checklist here for that he's looking for in the bottom of Bitcoin, which is the Bitcoin Ether move increasingly in a less correlated fashion versus the Nasdaq 100. The current price levels are close to the previous cycle's all-time highs, which, if you don't remember, Bitcoin peaked at almost $20,000. So getting close, not that super close, but it's getting close. And the financial mainstream media gloats about how stupid and greedy plebs were who attained short-lived wealth investing in crypto. And, you know, that does seem to be a case. There's definitely a lot more articles saying how crypto was stupid, how people are losing everything, and so on and so forth. And that tends to come near the bottom. Anyway, whether this is true or not, we will see. Personally, I think this target is a little bit premature. I do think we will go sub 25,000, but maybe Arthur ends up being right. We will see. Bitcoin miners are selling off their BTC holdings to cope with market headwinds. So this is something also that adds selling pressure to the market. We have all these mining operations with all these computers, dozens, hundreds, maybe even thousands of them, that all have serious costs, hardware costs, electricity costs, staff, warehousing, rental, and so on and so forth. And during a bull market, they might be able to sustain it. Maybe they got capital investment, maybe whatever the case is, that they don't need to sell the Bitcoin that they mine. But as we head into prolonged bear markets with the price of Bitcoin dropping, maybe they run out of capital reserves, or maybe they just need to start selling some of that Bitcoin that they're mining to be able to cover their operating costs and their running costs, which results in a lot of extra Bitcoin being sold every single day, which adds selling pressure to the overall markets. Then in a big development here, Japan actually legally recognizes stablecoins as digital money. So unlike New York, which has been very kind of anti-crypto in a way, Japan actually has for a long time been very pro-crypto from at least the mainstream media headlines that has been coming out. And now we can see again that the Japanese parliament gave a green signal to a bill that recognizes stablecoins as digital money. This drew attention to Japan because it was one of the first big economies to implement a legal framework for stablecoins. Stablecoins in Japan are now considered legal digital money. However, they are mandated to be backed by Japanese fiat yen or other legal tender that allows holders to employ them at face value. And speaking about Japan, the large exchange FTX has actually launched a licensed cryptocurrency exchange service in Japan. So FTX is another one of those huge cryptocurrency exchanges that keeps expanding in all different countries in the world in a compliant way, getting those licenses to be able to operate there legally and compliantly. So that is it for this week's edition of the cryptocurrency news headlines. If you like this video, please smash that like button. It takes you 2 seconds. It really helps the video get out to more people. Also subscribe to the channel if you haven't done so already. Get on my email list. First link in the description down below.